Hey guys, how you doing? It's the Intuitive Investor. It's a Sunday evening today, October 28th, and the theme of today's video will be on the current market conditions. There's been just a lot of volatility, and I have some thoughts on it. I've been watching CNBC, going on Market Watch, going on various websites, Bar Chart, Seeking Alpha, Yahoo Finance, just pretty much all of the more well-known stock websites, just to kind of get an idea of what's been happening. If you look at some of the videos that I've created, I have got two other videos that reference the market conditions. One that came out in April that discussed some of the trade war and some of the volatility. And that was right after we had that huge correction. So something that I wanted to bring up was just what's really been going on with the volatility ever since June 25th. So in my opinion, there's a couple things here. The first thing is the trade war, ongoing really in full effect since July. And in my opinion, I think it started a lot sooner because the administration had been discussing it early parts of the year, but it only technically began, I think July 25th is kind of the date that everybody agrees with. But here's a photo of just kind of some of the stuff that's been going on. It's this back and forth between China and the United States, and obviously it impacts other markets collaterally. The other big thing that I think is happening is the midterm elections. You know, the political climate here has been really unstable. Democrats hate the Republicans hate the Democrats. Half of the world hates Trump, and really Republicans are trying to maintain control while the Democrats are trying to take control. Another thing that's happening is this ongoing Mueller investigation. There's just been a lot of stuff happening middle of the year, towards the end of the year. Towards the end of the summer, and everything's gone silent. I think that there's something to say about. I think administrations or any pending investigations are not allowed to discuss anything within, I think, 30 or 60 days prior to a midterm election. I guess they have a quiet period too, but obviously the Mueller investigation has been ongoing. There's been numerous indictments. I think we had about 8 guilty pleas, and that's still going on. The other thing that I think could be potentially happen is that we have an exhausted bullish market. Meaning, if you look at this graph, it's been going on for 9 years. It's a 9 bullish run. And, I'm going to discuss the not enough phenomenon in a moment. But for me, I think some of the interesting facts that I wanted to talk about is the obvious. We have had 2 corrections in 8 months. And the statistics show that we encounter 1 correction, which is signified by a 10% drop or more in a very short time. But that on average we experience 1 every 357 days. And as you can see, we have had 2 of those in a total of 8 months. And so it typically takes about 14 weeks to recover. At least that's what they say. That's what the statistics show. But the notion that we've already experienced 2 corrections in 8 months, I don't know what the data shows as when the last time that happened, or what it would mean when a market corrects itself twice in such a short time. And the second time was recently, this past week. The S&P gave back all its gains for the year, and it's now negative since 2018. So if you could see this graph right here, you'll see exactly what I mean. Third quarter season has started, and this graph shows that 98 companies that have provided their guidance, 74% were negative. That's not good. Negative guidance. And here's yet another statistic that I wanted to share. According to the Wells Fargo Investment Institute, who's been tracking midterm election years, the average drop just prior to an election has been 19%, except in 1974 when it dropped 38%. Can you guys guess what was happening in 1974? Watergate. So worst case scenario, it drops to 38%. But given the fact that the president is under investigation, well, technically not under investigation, but just about everybody around him has been investigated, and to a degree, some of his closest alliances have been pled guilty or obviously been indicted. So can't imagine that sits well with people. But on a good note, the average bounce back, average recovery is 31%. So not bad, right? Another thing is the 10-year is going up, and the 10-year basically, as it goes up, it makes it more harder or more expensive for corporations to borrow money. And then when it makes it harder to borrow money or more expensive, then it makes it more difficult for them to be able to turn a profit, and could lead to missed earnings and lowering guidance. And so that's not good for businesses or investors. But I guess they don't have a problem charging 21% for credit interest rates, right? So go figure. So one of the things that I also wanted to point out is what happens when a good earnings report isn't enough. Because as I had stated in previous videos, there used to be a time where when we were recovering from the previous crash, investors were just looking for companies to report that their losses were diminishing, and that was enough to satisfy investors. And when that wasn't enough, then it was about meeting their expectations and meeting their guidance. And then that became enough, and at some point that didn't become enough. So then companies now had it to exceed their earnings expectation, and then also provide increasing guidance. And the thing that I am concerned about is that we may have reached a plateau where even if a company meets or exceeds, it's not enough. Regardless of the outcome, it's not enough. More companies have had to even report lowering their guidances. Companies have started to lower their guidances. In Q3 earlier, I had said, what was that number? 30 something percent, a third of them had. So when you consider that, then you start thinking about plan B, plan C, and exactly what you're going to do to get out before it corrects again, or maybe it crashes. You have to remember that if we see lower lows and lower highs, that's not a good sign. So going back to what I think could potentially happen. We've seen a very turbulent beginning to fall. And we've seen 2 corrections in 8 months. And we just saw the S&P give everything back. But the NASDAQ went down too. And the Dow also went down. So we're not just talking about just one sector. We're talking about all 11 sectors being destroyed. So we have to start to think about, where do we go? Well, with the midterm election happening on November 6th, we're about, what is that, a week and a half away? So let's think of some potential outcomes if in fact this has everything to do with midterm elections. Scenario 1 is the Democrats take control and the market falls in love with that. Scenario 2, the Dems take control and the market rejects it and it hates it. It can happen. Scenario 3 is Republicans take control and the market loves it. Scenario number 4, the Republicans take control and the markets reject it and they hate it. There are 2 more scenarios, and that's regardless of the outcome of the election, the market loves it and we rebound just like the studies indicate, and we just explode higher. However, we have to remember that a lot of companies, let me give you the 6th one before I get to this. Scenario number 6 is regardless of the outcome, the market hates it and we all go to hell. Kind of like the damned if you do, damned if you don't kind of outcome. Meaning that the market was begging for a crash or begging for an enormous correction, and it's just looking for that one catalyst. And so we kind of have it with the November 6th election because it's like a big deal here. Don't forget to go out and vote. But it is a big deal. And what's different about this time around is that we also have a trade war. We're in the middle of a freaking trade war. And industries on our side are beginning to feel the repercussions of that trade war. Caterpillar was just one of those. But what a lot of companies were doing, and this is where I think maybe Q3 guidance may have been fluffed up a little bit, is that everybody was trying to submit their orders just prior to tariffs taking effect so that they wouldn't have to pay any extra tariffs. And that's why Q4 is probably lowered. But if this trade war doesn't get fixed or remedied soon, then you're going to see January 1st, that first quarter, man, a lot of people are going to they're going to be pounding the sand. So this trade war is extremely big. It's a big catalyst for a crash. And I think it's probably one of the single most significant issues here, because this isn't just about us in China. It affects other markets as well. So my feeling is we're going to continue to experience little micro sell-offs between now and November 7th. I mean, the market's been up and down, Jesus. So it's like no one really knows. And if you go on CNBC, or like I said, I mean, I watch Squawk Box, Squawk Alley, Squawk on the Street, and all those Squawk shows. And for the most part, everybody's kind of like smiling and having a good old time, saying that it's just a minor correction or a blip in the screen. But let me ask you this. If you were on TV and you got millions and millions of people watching you, and you believe that the market, if you secretly, behind the scenes, between you, Kramer, and all these dudes, they all like, man, this market's going to go to hell. Well, if we say it's going to go to hell, then millions of people are all going to dump their shares, and we're really going to cause a correction or a crash. All right, just tell me it's a blip on the screen. Tell them it's just a minor correction. It's just shaking out the weak hands. but we'll exit behind the scenes. That may be happening. I don't know, maybe that's just the paranoid part in me. Not that I'm paranoid, but maybe that's the overly cautious part of me that's thinking that way. But I'm going to see if I can embed a poll on this video. I seen that there was an option for that. And so the poll will really be about asking you guys to chime in and vote. I don't know what the options are yet, but I'm thinking that the options would be about, is this a correction? Is this just a minor bump in the road? Or are we going to hell? So those are the options. Anyhow, I know that the video went super long, but I had a lot of different parts to cover. And in summary, we're just discussing all the areas that could be potential catalysts for a major correction. We were discussing also the 2 corrections in 8 months, when historically we've only experienced one in every 10 months, 10 or 11 months. And just the ongoing volatility across all 11 sectors. This isn't just a 1 or 2 sector targeted correction. This is affecting all of them. So I also noticed that the VIX and the TVIX have been doing very well. Those are the fear indicators. Those those tickers track consumer fears. And when there's volatility like this, those tend to go up really high. And in February, when the market was going to hell, I think it had gone as high as 100 and something. So if the market does crash, then maybe that might be where you might want to put your money in the short term. I am now holding cash, as I am cautiously looking at the market and maybe planning on fully exiting. We'll see. So hope you guys enjoyed the video. If you guys have any comments about your thoughts about the ongoing volatility, please leave it there, as I always try and engage my my viewers, and I do appreciate you guys. And if you haven't subscribed yet, please do so. I'm on StockTwits pretty much every other day. So if you're on StockTwits, please reach out to me as the Intuitive Investor. Take care.